We're going to check out SPX on multiple time frames, go to the SPY to get a lower time frame analysis and the alternate count, as well as the VIX, and finally our analysis on NVIDIA and what kind of trade setup we're getting into and what target we would like to swing to. And this is going to be just a little bit longer video than usual with the weekend update, and we're going to go pretty deep in the analysis. So if you have the time, please stick around and don't forget to like the video. And if you want to jump, we're going to do NVIDIA way towards the end. So if you need, if you're time restrained, go skip towards the end of the video. All right, let's jump into it. We have SPX on the monthly time frame. You see that we have wave 1, 2, 3, 4, 5 already in. We are correcting downward. We have lower highs, lower lows, but we've been in this range for months and months and months, like 13, 14 months. And we're testing that 20 simple moving average, and I don't think we're going to get over it. If we do, we have to start switching to a more bullish mode. But as of right now, we're just a range play. We're at the top of the range. We play it down. All right, going to the weekly time frame. By the way, we do these videos often. I haven't done as often this month, really, because the market has gone nowhere. Lower highs, lower lows. Looking at the weekly time frame, we're still in that lower high. Okay, this is our last lower high. This is the lower high after, and we're still making another lower high. We seem to have broken a trend line, but we're still in a bearish frame. And what we're really looking for to continue to this downside is testing this 3,800 and breaking underneath there. That would continue the bear play, and ultimately 3,500 would be also a nail in the coffin for the bulls. Okay, we're getting up to resistance here still with the MACD and the RSI. You see this, it's like a pennant, so we're still within that formation. It's still looking bearish on the stance. And by the way, the targets, I say this in a lot of videos, targets, we're still targeting first that 3,500, the break underneath there to 3,200, and then lower. But we're gonna have to. That's a different analysis, much further. We'll play it day by day, week by week. And speaking of day, let's go to the daily time frame. Trend is our friend. You see this nice resistance that we've been playing this whole time. Well, we're back up against it. And that's gonna be a real tough area to get over. Rejected off of it. Looks like we had an inning diagonal into that resistance, and we're kind of chopping around that 8 EMA. But now that we have options expiration over with and VIX expiration, all that stuff, now the market should be free to move, make some movement here. And you know, it's no coincidence that at the end of the week it stops right at that 8 EMA, just so we don't know where it's going to go next. But it surely looks like it's starting to break this uptrend line, and we're getting that bear crossover on the MACD. So sell signal on the daily. And before I move over, let's do a couple different frames here. I'm going to bring back the frame that we used, I think last week as well, but we've used quite a few weeks. Let's go to the default, just a blank screen. And I have this as a double top. We were playing this as a triangle. That's still valid. And either way, we're looking for a 5-wave impulsive move down. So, but I feel like the double top, now that we came so deep into this territory for retracement, almost a 90% retracement, that this is more of a proper double top. Even if we have one more move to the upside, we might eke out a new high or stop almost equal. There's still room to go, but I'm not sure that we're going to make it any further up. And the whole point of this one was to look at, you just see the choppy range. That's what's been happening for 3 weeks. We've been in this choppy range. Nice resistance zone, and then again, choppy range. So once we got into there, I mean, we're back in the chop zone. And I didn't think it would last that long. And even on the NASDAQ, it was 4 weeks since we've been in this chop zone. And so I think it's getting ready to explode, whether that's to the upside or the downside. It could explode just like this to the upside and back down for an alternate count that we have, or we could break down from here. And if it when it does make that move, it's going to be pretty explosive. Let's go to a different model here. Let's go check out our Elliott wave on a bigger picture. We have what we're looking at is a possible A that we finish here, or even an A finished way down here, and then a B, and then a C down, or this could be a big old 1, 2 setup and further down. But either one, it doesn't matter how you count it this way. If this is the end here, then we have an A, B, C correction. That's our primary. We've already had our correction, and this is a wave 1, and then we're correcting into a wave 2, and we move further down. Now, when we get over to SPY, we're going to see what's happening on a lower time frame. We're no longer looking at this as a running triangle. We're actually going to delete that. It is possible. I do have it in the gray shade that this is an A, B, C, D, and E, and we're still going to get the 1, 2, 3, 4, 5 down here. So it really doesn't matter. Okay, let's move over to the hourly time frame. We use 65-minute candles, so all of our candles are even throughout the trading day. And this will give you a point of view, a little bit more detail, that we had this channel. You see this channel? We've been in this channel for months now, and in this correction, and we're now cracking it. We're underneath that channel as of Friday, and we're just kind of pinned on that 41.25 area, and I think that's gonna let go now because the options expiration. So we should see our first targets somewhere right here at the 40.86 to the options expected move around the 40.73. But I have a little hunch that it's that we're probably going to break those areas as soon as next week, and then we'll be looking lower towards the 4,000 area. Okay, so on the okay, so let's move over to the SPY. SPY, here we go. Okay, now the whole point of going down to the SPY is, a lot of people that if you're watching this, you might be trading SPY, and so this will give you that kind of point of view that I'm looking at on here. Now, we have a wedge here as well. You can draw it a couple different ways, but I want to do like the benefit of the doubt, and we haven't reached that. We haven't broken down from this wedge yet, and we've had the negative divergence. We're down here. You see this, we have the standard deviation right here from point of control from this volume node, and so we're at the top of that standard deviation, and what typically most of the time that would be the end of your move, and we'd head back to reversion of the mean. So that would be kind of that target area. Remember where I said 4,000 on SPX? Well, 397, that would be that same zone there. And so this is kind of where I'm looking to head in the next couple weeks. And the options expected move, that would be sort of the 404 area. And that's right underneath that. This is kind of a zone right where that gap is, where I think next week should easily hit to that point, and that would break down from this area here. So this, as soon as we break down from this wedge and 408, that should release price to move further and go towards this point of control. And then we can reevaluate to see if this is more of a bullish setup or if we're going to continue to downside. I think we're going to continue to the downside, but we always have to look day by day. So don't forget to hit that notification bell, because we do these. I know I said that already, but we have to repeat that. We do these videos often, and so we want to always give you the point of view, whether we think we're going to start getting more bearish or bullish. And the SPY, I will go ahead and go to the Elliott wave count on the lower time frame. on the 65 minute, we have this as an A, B, and then a 1, 2, 3, 4, and an ending diagonal to N5. 1, 2, 3, 4, 5, all three-way moves. That looks more appropriate to me than any other setup. And so now, what is this move? What is this? It looks sort of corrective, looks sort of jumbled. To me, it looks like a compressed 1, 2, 1, 2, and even a smaller 1, 2 to get down to these 3, 4, 5s, 3, 4, 5s to continue downward. Now, that could be the case, or this could be, we do have 5 waves here. 1, 2, 3, 4, 5 for a leading diagonal. And this would be, we'd bring the 1 down here in that case, and we'd see a 2. Probably retrace just a bit, and then we'd continue to the downside. But that would be sort of my bullish alternate, or excuse me, bearish alternate in the very low time frame. All right, and then if we go to our alternate, our bullish alternate here, this would be a 1, 2, and now you'd have a 1, 2, 3, 4, 5 for the wave 3 ending there, and then we're going to get some sort of ABC correction for a wave 4. Okay, back out of here just a little bit more. Okay, that's a better view. That would probably almost be completed with the A. We'd retrace for B, and then we have a 5-wave move down for C, or perhaps this would be some sort of triangle, some sort of wave 4, something to confuse you and take time. But the levels are more important than looking at what is happening with it. It's we start breaking this 405 area. That's the bottom of the lower degree wave 4. That would, if we hold that area, then that means we're going to go up to a wave 5, somewhere probably in between 420 anywhere to 430. So I know that's a big range, but we'll have to see what kind of 5-wave move goes up. If that's the case, that would be the bullish scenario. And then we'd have to rearrange what we're thinking about, bearish or bullish, into the future there. So I just wanted to give that. This is super important. Level is the bottom of this wave 4 here. So 405 breaks. We continue to the downside. It's a bearish setup, and this is an ABC correction. If we hold this 405 area to a wave 4, and then we go up to wave 5, then we have more of a bullish setup there. So that's what I want to show you on SPX and then SPY. Now let's see what's happening with the VIX. And this is also kind of solidifies the bearish setup. It's going to be bullish for the VIX, which means bearish for the market. You see these wedges down here. I redrew what was happening. I had a triangle if you follow my videos, but now we're in a channel. If I kind of go up to the daily, you see the channel that's heading down here, and we hit the bottom of that channel. So you have nice points that hit. I know that we broke down from this channel. The VIX is all over the place. It's very volatile, right? So you can always have the breaks, the fake breaks, and we have all these points here. Well, we touched the end of that channel, and we had a reaction, and we're also breaking out of the wedge. So that's a bullish wedge, and we're just kind of setting up again, kind of like a 1-2, 1-2 setup. And if we hold this low, then it looks like this is going to start moving out. It could fill out a channel further, but that would be very bullish on the market. And then we'd have to, if we made new lows, we'd have to adjust to that top there. But as of right now, the setup is clean, and we're just back testing the wedge, and we should see higher prices with this positive divergence here in the VIX, which would bring the market down. Okay, so I just wanted to look at that one quickly. Now, if we move over to NVIDIA, we can go through this time frame. Let's go ahead and do the whole multiple time frame analysis, and then I'll show you that wedge setup. So let me go to the monthly, and I won't spend as much time on this as like we did with the SPY, but I want to just definitely show you what I'm looking at. Look at the levels here. We had a nice little rejection. We're so far rejecting off of this 280 area. We talked about this price action later. We're trying to get a bullish cross. We'll see if that's a whipsaw or not. Let's go to the weekly time frame. On that weekly time frame, we gave ourselves a little bit more room because we gave the top of this breakdown candle. So we gave ourselves a little bit more room. If the market goes up just a little bit more, NVIDIA is likely to also have that that little bit more move to the 290 area. But right now we have a nice little rejection candle on the week. We have some sort of doji, but really we've just been moving sideways. We had our reversal candle possibly right here, like a hangman. And then after that, we're just following the market sideways, right? So we have 1, 2, 3, 4 weeks in a row that are just sideways, and they all kind of look like it's heading towards that bearish area. But as of right now, you can consider it a bull flag until it breaks down. I don't think so. We have the negative divergence here on the RSI. That's a big deal on the weekly time frame, and I think we're going to go lower. Okay, on the daily time frame, we'll start to see some detail form here. And you see that we no longer have the wedge actually drawn. We're looking at the minor support here, and we broke down from that minor support, and we're just testing back to that 20 and the 8 EMA right now. So I think we're broken down. I think that's confirmed. It's a sell signal, and we're also underneath the 270 area, which has been a tough area to deal with here in the market. And I think we're going to start dropping pretty fast. We have the standard deviation move from this point of control. We're just over it. And I think we're going to come back to that in the near term. That's going to be a pretty quick move, in my opinion. And I can tell you why later. We have the 65-minute, and I'll show you what's going on here. So that same level right there. And notice if we get in a little bit further, well, first of all, we have our minor support right here at the 260, and that's also where the options expected move. So I do believe we'll get to there pretty quick. And if we're pretty bearish on the market, we should break down from there. And then we have a nice big area. You see that where price just broke out to the upside. Well, I think we'd get down here pretty quick to that 240 zone. And from there, we would end our trade. So you see where the sell signal is. We're going to take the trade on NVIDIA next week. We'll have some puts, some near-term puts. We'll take some of the profit off at 260, and then we'll roll them over to into next week after going into the 240 zone. I think that should be pretty quick. And if we go to this, I have these different layers that I like to put onto. If I go to my board, by the way, you can see right here, SMH, the number one holding is NVIDIA. While this is loading back up, this frame is my point of control kind of board here, and you can see that right now we made this huge node. I wasn't even planning on looking at ES, but since it pops up first, notice that when we start to if we start to break down, I say when because I think we've already broken down. Look at this big volume gap. We're probably not going to stop until we get down to that point of control pretty fast. Okay, so that's kind of the same thing I want to look at in NVIDIA. And if we go to that and back to the 65-minute chart, I don't want the daily time frame is the point of control is way further down, but also on the hourly time frame is way down here. But we'll we'll look at that when we have a chance. Look at this. Look at our setup. Our setup is a breakdown from here, and this is the volume node, and then look at that big gap into the next volume node. So that's our 240. This is where we are right now, all the way to 240. I think we get there pretty quick through that volume gap. And that's pretty much all I want to show you, this nice trade setup that we have. And then we'll continue on Monday doing another video if the market starts breaking down from there. All right, thanks for joining us here at Options Center. Sorry for the long video, but I hope this helps. And don't forget to like the video. Have a wonderful rest of the weekend.